Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hello NatGas friends, looking at natural gas daily, weekly, shorter term time frames. So once we saw the double rejection from the 200-week moving average, and once we saw this lower high and lower low, this was the notable day, hitting that lower low after we broke 321.1. And now the bears are absolutely in control of the short term time frame. But don't lose sight, look at this daily, higher lows and higher highs. And after the breakout, this is a notable significant pullback on some pretty decent volume, but we are still maintaining the higher lows. Unless we were to break 2866, a higher low will be formed wherever we find support here. So we did lose 10%, no doubt about it, but once we saw that lower high and lower low, I was saying to look towards the low $3 range, and we even broke $3, that psychological support level. So the 50-day moving average is 294. We bounced just above that, but look at the weekly, just above the 10-week as well, 295. So two rejections from the 200-week. Last low, we bounced right above the 10-week. Last time, we held it on the last dip as well. So we look at those on the daily, and that's this move and this move, both of them holding the 10-week support. So we bounced just above that level. Not much bounce with not much lower wick, but we'll see if that follows through this coming week and if the bulls turn it around and head back at least towards the low $3 range. We'll look to this middle Bollinger Band, 312. Let's get some resistance levels on the shorter term time frames. I want to point out the severity of this dump. It was 3, 6, 9, 11 red hours in a row. The hourly RSI was down at 10. I can't ever remember seeing it that low, and I looked back, and it's the lowest in at least 5 months, and then I stopped looking back after that. But very notably oversold on the hourly. So risk to reward down here at the $3 level at the upper 290s is in favor of reward because we are so oversold. It's unlikely that we see too much further downside without an oversold bounce. So we did see the beginnings of an oversold bounce towards the end of the day on Sunday, but very little follow through, not much to see there besides a resistance at 2984. That was the high of the bounce attempt. So we'll need to see on Sunday the bulls break that level to see some higher highs and a head back towards $3 psychological resistance. Checking the 4-hour chart, RSI there is just above 20, very oversold, and we zoom out and see on the daily time frame, we see those higher lows. Well, here it is on the 4-hour, still very much intact even after that big pullback. So very oversold on lots of time frames. Daily RSI is still pretty high. We're in the mid 40s, so not seeing oversold conditions there, but we are looking for a short-term bounce on Monday. We will see how it plays out, and keep your stop losses in place. You could have a stop loss below the low 2957. The worst case scenario for the bulls at this point, if you grabbed a bullish position, I grabbed a very small bullish position in some UNG next week calls, the second half of Friday, and I chose a very small position because it is counter the trend and there weren't many signals of a bounce underway yet. So that is how I adjust the amount of capital I'm risking, whether I'm trading with the trend and all different kinds of little factors that go into my decision. But the last thing the bulls would want to see is some short-term bounce Sunday night, and then by the time we wake up Monday morning, seeing the RSI cooled off to a significant enough level that the bears are back and driving the price back down towards 2957, and obviously breaking that would be a bad sign with another lower low coming. So keeping an eye on those names. It was also notable that both UNG and UGAS held up very well while natural gas kept showing weakness. So we are right at the middle Bollinger Band for UNG. That level is 897, and we did hold it. And for UGAS, that level is 4563, and we held that as well. So again, not bullish reversal candlesticks off that level, but that support is holding. And like I said, if you compare the 5-minute charts for UGAS, UNG, and natural gas was continuing to dump and hit lower lows, while both UGAS and UNG were still above their low of the day. So it did stand out that the bulls were holding up the two ETFs trading off of natural gas, and UNG is not an ETF, but you know what I mean. So we'll see if any strength translates into an oversold bounce on Monday. We'll check back in Monday after hours. I appreciate you watching. Thanks for the likes and the shares. Have a wonderful weekend.